Every time the European Central Bank makes a decision, the euro moves, sometimes gradually, sometimes within seconds. If you trade any euro pair, understanding why that happens is not optional. It is fundamental. The ECB sets monetary policy for the 20 countries that share the euro. Its core job is to keep inflation close to 2%. Every tool it uses to hit that target has a direct effect on what the euro is worth in the Forex market. The most powerful tool is interest rates. When the ECB raises rates, borrowing across the eurozone becomes more expensive. That tends to cool spending and bring inflation down. It also makes euro-denominated assets more attractive to global investors, because those assets now pay better returns. Money flows in, demand for euros rises, and the currency strengthens. When the ECB cuts rates, the opposite happens. Returns fall, investors look elsewhere, and the euro comes under pressure. Here is something newer traders often miss. Markets do not just react to what the ECB does, they react to what was expected. If a rate hike is fully priced in and the ECB delivers exactly that, EUR/USD may barely flinch. But if the ECB surprises the market, cutting when a hold was expected, for example, you can see sharp, sudden moves across every major euro pair. That gap between expectation and reality is where a lot of the volatility lives. Forward guidance works the same way. The ECB communicates its intentions long before it acts. When ECB officials signal more hikes are coming, the euro can strengthen well before any actual decision is made. When language shifts to something more cautious or neutral, traders read that as a sign the tightening cycle may be ending, and the euro can weaken on words alone. The press conference that follows every policy meeting is one of the most watched events in the Forex calendar for exactly this reason. Beyond rates, the ECB has used large-scale bond buying programs, quantitative easing, to inject money into the financial system. More euros in circulation with the same level of demand tends to push the currency lower. When those programs are wound down, it signals a tighter environment, which can support the euro. Underlying all of this is inflation data. The ECB exists to control prices, so when eurozone inflation comes in above target, markets start pricing in rate hikes. When it falls short, stimulus becomes more likely. Watching both headline and core inflation gives you the clearest early signal of where ECB policy is heading next. If you want to put this into practice without risking real capital, a demo account at ZenithFX.com lets you trade through live ECB events in real market conditions. Trading always carries risk. Only ever commit what you can genuinely afford to lose.